Holy smokes, guys, what the flippity flip flap flop is going on? There are so many crazy things going on and so many black swan events happening this year, it's hard to keep up. In this video, I'm going to be going over the disruption in the US oil supply chains, what this means for you and what this means for me and the markets, but I'm going to be getting into the bigger picture with everything that's happening right now. We are having huge amount of supply shortages. There are shortages everywhere. There's so much crazy things going on with the supply chains that just seem a bit suspicious for me. And I'm going to be going over how the Fed predicted this cyber attack. And I'm going to be connecting some dots from a few big, huge events that have led up to this. And then I'm going to go over how we can prepare for the storm that's coming. Okay, so first things first, let's get into the huge news that's happening right now. Top US fuel pipeline remains days from reopening after cyber attack. That's right, but we're going to dig a bit deeper into this issue. Before I get into that, let's go up to a few events that have led up to this and the huge risks that are still in the markets. Well, first things first, in 2018, we had the trade wars with China. Then in 2019, we had the repo market crisis. Then in 2020, we had the pandemic. We've got big, huge tax hikes coming for capital gains and also for corporations and more taxes for the rich. We've had huge amount of supply shortages of everything that's essential, and now this. And so is this a coincidence, or is there something more sinister at play? It says here, the biggest US gasoline pipeline will not resume full operations for several more days due to ransomware cyber attack blamed on the shadow criminal network called DarkSide. And the interesting thing that happened is, it wasn't actually the hackers that shut down the supply chain. It was actually Colonial that made the decision to shut it down for 4 more days. So this could just be them going through precautions, but it's interesting that they chose 4 days because that's just enough time for them to create huge supply chain disruptions. And this is also coming at a time where manufacturing in the US is being shut down a lot as well. Even though the supplies are there, they're continuing to shut down the manufacturing and the supply chain, and not to even mention the Suez Canal incident where a ship in a straight canal turned sideways. Now, I'm not an expert on ships, and some people pointed out in the video that it is quite easy to get stuck. But again, all these supply chain disruption issues happening at a time when there's been huge amount of money printing and quantitative easing, and now the risk is that there's going to be high inflation, and this gives the Fed an excuse to blame inflation on that. It just seems like a bit of a coincidence for me. What do you think? If you go over the latest job market reports in the US, the biggest declines were in the manufacturing industries. So what's that telling you? They're shutting a lot of things down. And of course, this means there's going to be more pain for consumers at the pump when at this time in the summer, it's particularly a time where there's high demand for gasoline and for fuel for your car. So this means gas prices are going to be going up. And this is going to mean there's going to be more pressure on inflation. And it'll be very interesting to see what the CPI data comes out with on the 12th of May. It'll be interesting to see that month-over-month data is increasing, or if they found a way to manipulate it to make it seem lower. And of course, it's going to hit small businesses and consumers very hard. Listen to this. In Georgia, trucking company owner Marcus Blash worried because his business cannot store fuel on site to hedge against price surges, which big corporations can. We pay at the pump, he says. It hasn't hit us yet, but this is going to hurt big time. And we're already starting to see gas prices skyrocket, and even some gas stations are running out of gas altogether, and there's huge amounts of lines just to fill up your tank. And guys, I just did a video yesterday on the 4th Industrial Revolution and the Great Reset. And in that video, I was talking about how they're trying to plan to digitalize everything. But this is just another reason why they can't digitalize everything, because of huge amounts of risks in the cyberspace. If they completely make the financial system go digital and there's a cyber attack, this will be enough to bring down the whole financial system to its knees. There still is a need for cash, and there still is a need for physical goods and services, and to do things an alternative way, just not digital, because it makes more sense and because it's more productive and makes more profits. Okay guys, now something very interesting that actually happened leading up to this is the Federal Reserve, in his 60 Minutes article that I did a video on, and you can go and find that on my YouTube channel. And in this, he says one of the biggest risks for the financial system is a cyber attack. And this was just last month. And I said in this video, why is he saying this? Is he trying to warm the public up to potentially this happening? Because it's funny, every sign of disaster or artificial disaster that's created for the financial system or the supply chains or just anything really to do in the country, normally the officials say it's a risk before it happens. Just like how Bill Gates predicts everything. Listen to this, everyone. In terms of what could trigger a market collapse of similar magnitude, Powell said the Fed is most concerned about cyber attacks on financial institutions that halt their ability to track payments, a risk that the International Money Fund has estimated may cost banks around the world about $100 billion annually. And guess what? Next month, boom, we get this huge issue. And then the NASDAQ drops about 2.5%, the S&P down 1%. The Asia markets, where I'm in Australia, the ASX 200 dropped around 1% today. And the futures are saying the NASDAQ is going to fall again today about 1.5% and the S&P 500 around 1%. We'll see what happens when the market's opening, but we had a pretty decent decline yesterday and it looks like we're going to have more pain today. And could this be the catalyst to pop the bubble? Because even Warren Buffett and Charlie Munger said that the stock market is at crazy values. All the market indicators that predict or say that we're in a stock market value or the stock market is overvalued is flashing red right now. And this just gave the excuse for the hedge funds, which have been huge net sellers, where retail investors again keep getting screwed every time. Wall Street always beats the retail investors and finds a way to get out of them. They've been buying while the big insider hedge funds have been selling. Let's keep reading. This world evolves and the risks change as well. And I would say that the risks that we keep our eyes on the most is now cyber risk. Hey, this gives them a good out to blame all the issues on the cyber attacks and the supply chain disruptions, doesn't it? Powell said Sunday, these scenarios in which a large financial institution would lose the ability to track the payments that it's making, where you would have part of the financial system come to a halt. And so we spend so much time, energy and money guarding against these things. Guys, this is crazy. He literally just said this in his interview and I never really heard Jerome Powell talking about cyber risk before. And then all of a sudden we get this huge issue. And again, putting the pieces of the puzzle together and thinking about the big picture, looking at the macro, not just the micro, and thinking for yourself, what has been happening for the global financial system for the past 2 to 3 years? Well, inflation has been very low and they haven't been able to get inflation or official inflation up, especially in Europe. And in 2019, they're all saying that, it looks like we're going to have low growth in 2020. There could be deflation, and the Federal Reserve and the governments hate deflation because they need to devalue the debt through inflation. And not only do they devalue the debt, but then they increase their tax revenue to afford the debt. Because if interest rates rise and they get deflation and their revenues drop, the US government could very easily default on the debt. And the Federal Reserve keeps saying, we've got tools to deal with these financial issues. But really, they've used all the interest rates MO. They've used most of their quantitative easing MO. They've already printed so much money. What else can they do to lift the economy? Well, something I've been thinking about, and this will just be some food for thought for you to think about. This is not facts, but just some of my assumptions and speculation is, what if they could create fear and FOMO and get people to go out there and spend money that they can't afford to spend? Well, an easy way to do that would be to say, everything's running out. Go to the shops, buy it now. It may not be there tomorrow. Get in now, there's huge amount of supply shortages. We don't know if these items are going to be there tomorrow. Buy now. Well, that's exactly what's happening. We're seeing supply shortages. We saw in 2020, people rushed to the shops and brought up everything. They spent and they loaded up their credit cards and got into debt to spend on those things because they thought if they don't buy it, it may not be there tomorrow. So is this just a new tool that the central banks and the governments around the world are using to force people to go out there and spend? Because we all know people have been saving more money in 2020 than since the Great Depression. And also all these supply shortages and supply chain disruptions, and now with this US oil pipeline crisis, the Federal Reserve can say, no, this inflation is just temporary. It's just supply shortages. It's not from us printing all this money, and don't worry, we won't lift interest rates because just in a few months, it'll all go away. But people, the damage is already being done right now. What have I been telling you the past couple months? Get into defensive stocks or commodities. And if you did that a couple months ago, you would be laughing and it would have been a pretty good profitable trade. Again, it's not financial advice. I'm not a genius. I'm not a guru. I'm not some financial guru. I'm just a random guy on the internet that has borderline obsessive compulsive disorder and studies the markets and the macroeconomics every day. I use that information to try to make the best informed decision I can and give you the information so you can do your own research and make up your mind for yourself. But again, what's happening in the markets is the Dow Jones Industrial Average is not falling that much, but the NASDAQ, the high flying tech stocks that were all the rage in 2020, all the retail stocks, all the meme stocks, they're getting smashed. And right now we're in the fourth turning, and that means between 2008 and 2028, we're going to be in for some tough times. Okay, so what can we do to hedge against these hard times that are coming? Well, what do you normally do in your day-to-day life, even if you're not an investor? Normally, for example, if you buy a car and if you're worried you're going to crash that car and then lose all your money or lose that car because you won't be able to afford to repay all the repairs, you go out and buy insurance. If you're worried about your house burning down or someone breaking into your house, you buy home insurance. If you're worried about passing away and leaving a huge amount of debts to your loved ones, you buy life insurance. Well, what you need to do in these uncertain, crazy times, because again, we've got so much uncertain. We've still got the trade war with China. We've still got all these supply chain disruptions. We're still battling a pandemic. We've still got these huge tax rates for capital gains. It's going to take a lot of money out of the stock market. We've got all these corporate tax hikes coming. We've got risks of high inflation coming and rising interest rates and the Federal Reserve tapering its balance sheet. We all know when they start to taper, stocks fall, because it's 100% correlated. Well, right now, you need to buy yourself insurance if you're in the market. And not only this, I'm seeing things are getting so crazy, I'm actually becoming a bit of a prepper now. Because if food prices skyrocket, if we get hyperinflation or they keep rising rapidly because of more supply shortages of all the essential items, well then, if you've got your own self-reliant food source, that's a piece of insurance. If you've got your own energy source, that's your insurance. Your own shelter. So I think it's time to look just beyond the financial markets, because what happened in 2020 when the market completely collapses, even the safe investments like gold plummeted, treasury yield bonds plummeted, the money markets froze. So there'll be nowhere to run if you're all in this paper digital economy. So you're going to want real hard assets, obviously like precious metals. If you have your own hard digital wallet like Bitcoin, you may want some Bitcoin. Again, this is not financial advice. So I am investing in commodities as a hedge against inflation because my grocery bill's going up. And if my energy bill goes up, well then my commodity portfolio should be going up as well. And as a hedge against inflation and the devaluation of the dollar, again, I'm still bullish on Bitcoin in the long term. You have to do your research. I'm not putting all my money in there. It's very risky, Bitcoin, but it has been the best performing asset class over the last decade. And I think it most likely will over the next decade. But the best hedge against inflation and devaluation of the dollar, you know what it is? Doggy coin. Just kidding, don't invest in doggy coin. Well, if you're a stock guy and don't want to invest in these other asset classes, if I could only invest in stocks, again, I'll invest in those commodity stocks, precious metal ETFs, even though I don't like investing in them because they manipulate the price of precious metals. And there's been a rotation from high growth tech stocks to value stocks or dividend stocks. And that's what I've been saying before. If you're a stock guy, it's time to rotate into value because these high flying tech stocks are very overvalued and they're going to come down exactly like what's happening right now. So everyone, I hope this gave you some food for thought to think about what's really happening in the world right now, to really question your beliefs, question why is this happening, who does it benefit, and how can I prepare? And for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date with the latest happening in the stock market, housing market, and global economy. If you're bored, I'll put up some other videos here. I'll see you there.